Hello, everyone. Welcome back to the rationalinvestor.co. This is our Bitcoin summary for Monday, August 11th, 2014, for our YouTube audience. I hope everyone's having a great day. Unfortunately, it looks like little Mr. Bitcoin isn't, but anyway, just quick promo. This is our site that Julian and I have been working on for the past month or so. It's up and running now. Everything's marching along. We've got the school up and running. We're well into our first month of that. We've got the live trading room going. And of course, you can view the members detailed video in the live crypto live room here. We'll just pop over here to give you an idea what that looks like. um, So we've got little charts and chats, and you can see as price action's heating up here, the chat is really taking off here. Full member video, we had one here on Sunday that I did for members. They can watch it there, and of course the free YouTube video is embedded here in the live room as well, in case members want to watch that. And of course, we've got our Crypto Daily, our blog, just basically blogging away. Lots of fun stuff. In essence, my last blog entry was that our bought long entry got stopped out at break even, and interestingly enough, that stop level itself was actually an entry for a short, that being the Gartley pattern, but we'll get to that in a bit. So anyway, the site's running along really well, and you're more than welcome to pop on by and take a look at what we're doing. And learn more about crypto trading. So onto the video, or onto the analysis, beg your pardon. You know, one thing I thought had just jumped out at me here today, I noticed that the stock market is trying to work its way back up here. You know, this has been the 30-minute chart rally on the S&P 500 over the past bit, and as a result, you see that Bitcoin has come off here. So you know, I'm still watching this correlation between the stock market and Bitcoin. It almost seems to me like Bitcoin is sort of a run for safety proxy, that when the broader market and, you know, i.e. the stock market, the risk market is perceived to be topped out, people run into Bitcoin. So that's a really interesting dynamic. We're going to have to see how this plays out over time. All right, on to the daily chart. So again, this is the YouTube summary, so I want to just keep things nice and simple and keep to the higher time frames for you guys. And we'll drill down to the lower time frames and look at individual setups in the members room. You're more than welcome to come on over and join our group, and we'll get you set up there if you're interested in what I do here. All right, so the daily chart, you know, nice simple story. Big monster bull run up last year. People have sort of forgotten that now a bit. And we've taken basically the past 6-8 months and cleaned all that up. You know, in the process, and it was interesting, I just drew a couple trend lines here last week, I guess over the weekend here, added to this chart a little bit more information for you. But you can see how, you know, this original trend line off the top here was really important, and then we broke out through this inverted head and shoulders through that. And if you just draw a trend line off of the next peak, this peak right here, to this peak, that's this trend line, you can see how we rallied up through it. Then we came back down and tagged it, and so we've just gone sideways. But the concerning thing for me is look where that trend line is now. It's way down here, and gee whiz, there's our OTE zone. So a little bit concerning in that regard. So we had our OTE trade, and we had a nice natural bounce back to the 38.2 and the year-to-date 50% level. And really, you know, and I've said it on a number of these videos, and I'll probably say it again before the end of the year, this was probably our trade of the year. It was basically about a 40-45% return on capital invested. Was one heck of a trade, and unfortunately, that's getting a bit distant now. We rallied up into this, here's that 38.2, here's the 50% level. So we rallied up into sort of this resistance zone. And this is back in basically May, all right, the end of May here. And all we've done here now for basically June, July, and now half of August is just gone sideways. You can see we have a number of trend lines all fighting in the market right at the moment. So it's not going to be just a straight line boom. It's going to be a bada boom, bada boom, bada boom, 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 you know, sort of working our way through all these support and resistance zones. Just the recent price action, of course, you know, we see today, you know, right out of the gate Monday morning, probably not the best thing for us to see. We're down 1 3/4% here. It's 576 on the BTCE, and you can see that we're threatening to put in a new double top here. And we, you know, it's interesting. I did not this past week, but 2 weeks ago, we did Introduction to Technical Analysis for our school. These guys over here, the School of Bitcoin Trader Development, and we were just simply talking about, you know, the introduction to technical analysis, not getting into all the fancy indicators or anything, but we're just going to just apply just really simple principles. And we're going to say, you know, let's take a real look at market structure and see what market structure is telling us. So if you see M's, right, that's bearish. If you see W's, that's bullish. And unfortunately, you know, we can also say, you know, if you see M tops, where price tops out in an M fashion, that's bearish. And we can also say that if we see V bottoms, that's also bearish. And conversely, if we see V tops, that's also bullish, right? So this is just simple market structure philosophy. So, you know, we have big run up here, and, you know, again, this is late May. We have the market rally up, and then M top, right? So that's this stuff, bearishness, right? The bottoms themselves look rather V-like. Okay? Now, we did have this rally back. The problem is that it came right back to the 50% level, just straight V. And when it does that and we get a deep test, then that sets up, remember, well, maybe you guys on the daily charts don't, but this is a BAT target right up here, 88.6. And on the 4 hours, that's pretty obvious. We actually had a really nice fail right at that BAT level. So, you know, again, market structure, rally off of the bottom V shape, that's bearish, right? Here, let's just put titles on these to make it easier for you. Bearish and bullish. Okay, so as we sort of work through our scenario, we just got a couple bearish votes, right? Bearish M top, bearish V bottom. M top, zang, 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 bang, right? More bearishness. Then conversely, V bottom, also bearish, right? This low needs to be tested at some point in the future. So again, more bearishness. We rally off the lows, right back up into this original M top, right? We never did break the top. And then what did we do? We went up, down, and then, you know, heard me recently, oh my gosh, double top within a double top. Lots of ME type action, right? So more bearish. And then the lows, here's this recent low. This is V bottom, bearish, right? And then the recent action here, we potentially have another M top, bearish. So, you know, I really would like to see these lows hold, but if they don't, we might be setting up for another wash down here, right? So just simply off of the market structure, right? Just simply off of this very basic principle. Right? Can even make it look nice and snazzy for you there. We can infer quite a bit of information from this if we can start putting in W's, i.e. these 72 lows hold, and we start moving back up through this 596 area, then we got W's going. Yay! We can start getting bullish again. But as you can see, all these lows have just been all V's, right? And the tops are all nasty M's. So put it all together, and I still have to be looking for this move down into this 543 area. Sucks, but that's just the way it goes. Now this isn't a textbook harmonic pattern, and I'm not, I'm still really hunting. There really isn't too many resources on the web, but geez, I've seen this so much in my trading career that you often get these, like I often talk to you guys about how markets move in continuation patterns, right? It's usually like, a lot of these that you see, right? Like let's take this green one, for example. Let's move the chart up. It's A, B, C, D, right? And that's a very common price pattern. This A, B, C, D. I've also seen, and I'm sort of studying it, as I've told you guys before, I still fully believe I'm still very much a student of the market. But I've also seen these patterns too before, and I don't know what the name of it is. But in essence, you have two smaller moves that are contained within one, at the edges, that are contained with one bigger move. And usually what I find is that the two smaller moves, if you add them together, they're the same size as this one bigger move. And that really looks to me like what we've got going on. So all I did was I just cloned this first move here to here, boom, boom, and I project that off of this high, which was 598.50, right? So that's right up in here, right? And that takes us down into here, this 536 area. And that makes a lot of sense to me because over the past little while, I've been talking to you guys about how if we just simply, and this is a very powerful tool, is if you draw a trend line off of the previous significant peak, which would definitely is this one right here, this, what number is that? 554, right? And then projected off of this significant low, 545.50, this, in my opinion, is the real support in this market. So that's right down in this area, right down in here. And then if you look at this trend line off of this peak, and you can see how the market just toyed with this day in, day out. Very, very important line. Prices could easily come right back down to that line, right? And so that would be boom, boom. And what's interesting is we finally get the 38.2 confirmed here. Now the problem with that, of course, right, is that if we do that, that puts in a massive bearish market structure top, right? So, sadly, the long and short of all this is, we're working our way through the dog days of summer. The stock market itself is on some pretty wild gyrations right now. Let's take a look at what the stock market's doing. Here we are. So we gapped violently higher. Now we're heading back into the gap. What I think I saw happen was as the stock market was gapping higher and then heading into the gap, it's almost like we got a capitulation on BTC. Is this sort of the end of the dead cat bounce for the stocks and they got to head back down and fill in some lows? I mean, a great example of market structure, right? All this is a V bottom. That's way too early to tell right now. My general feeling, though, and I just don't understand, but I guess we'll learn over time, is it seems to me that BTC in a weird sort of way is almost being perceived as a safe haven, where if growth in the broader economy is really in question, and here's an interesting little tidbit to sort of reaffirm that idea. When BTC started to really come back there, you'll notice that our inflation-deflation gauge just went into deflation. So we now are officially in a deflationary environment. And so the interesting thing there will be, do we head into a massive deflationary spiral, in which case I could see BTC becoming quite a safe haven? or do they clean this back up and re-inject some inflation into the economy? Frankly, I just don't know what the answer to that is right now. So, long and short of all this is, we're still in this trading range, 668 to 643. I think the low end of the range here is definitely going to be tested here over the next little while. When we look at the lower time frames, we actually have a little bear ABCD target that's been hit. And because you could argue very much, you see these green lines, and I had sort of said that defined whatever way the market broke, that defined the trend going forward, so it broke down. I would argue you could probably do it same thing again here, where you can just say, this 572 level, it was very important. It had a couple key lows there. So we'll just define that as the bottom of our trading range. And obviously this high here, and really it's probably this high, but this high here represents the top end of our range, and we're just sort of bouncing around in between those. So range traders might have a trade to go long off of these 72 levels. We'll explore that in the members section in the detailed video when we look at the lower time frames. For you position traders, you YouTubers, you buy-in holders, really I don't see a heck of a lot going on here until this massive trading range is broken. And I think that at the present, there's still lots of argument to be made for the downside of this range to be broken. We look at the internals. Remember, we were really watching this OBV to see which way she was going to turn. I don't see any great buying volume coming in here. It sure looks very sanguine to me. We had a little bit of buying pressure come in on that stop out in the stock market when the stock market rolled over. But if the stock market's getting happier, then I can see people are like, okay, phew, stock market's not going to collapse here, so I can go back into stocks and pull my money out of Bitcoins. So we'll see how this goes. Real interesting battle right here. The bearish momentum divergence that we've been talking about on MACD for quite some time, still very much in place. I don't really see any change here. I had postulated last week that I kind of wanted to see some sort of action like this. If we get a big flush out down here to 543 and the MACD does not go to new lows, we make a higher low here, then we've got the case for a bullish divergence forming. So then we can finally start getting bullish again. We've been bearish now for quite some time, and it's been rather painful. Last condition on Willie, we had stupid overbought, and basically he's just cleaning himself up. It feels like we're in the latter stages of this correction. You can sort of feel how it's sort of stair-stepping its way down here. And the sad thing is we may break through the lows here. We may have just a quick jackknife down into the OTE. Sadly, that's when the public's going to be dumping when they should have been, active up in here, right? And of course, Willie will probably be stupid oversold into that event, and that's ironically enough the worst time to be a seller. So, put it all together, dog days of summer, no real impetus to be a huge buyer right now. Stuck in a big trading range. The trading range itself is coiling. It's getting tighter and tighter. I think we're going to still play on either side of this trading range. And, the impetus, the sort of the short-term push, the short-term direction, unfortunately, market structure, we're still looking rather M-toppy, and it looks like we're about to attack this 572 level in earnest. 572 levels taken out, then that's another M-top, which just confirms more bearishness here. All right, so unfortunately can't be the reporter of hugely bullish events, but hey, you never know. Maybe through the day these lows will hold and we'll tick back up through 595, and tomorrow's video will be all bullish. But that's can't put the cart before the horse. We got to get that breakout first before we can get bullish again. All right, so that's your daily video for today on YouTube. Everybody have yourself a great day, and we'll talk to you again soon. Bye for now.